Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing mixed markets around the world this morning, but before we get to our markets, let's talk Japan. Looks like it's going to open at 2013 highs.
Japan. Can you invest in Japan?
I've heard that you can.
Yes, I think numerous times we've talked about the opportunities to buy the dips, play the breakout. Let's just get into the chart of the EWJ, which has been an ETF vehicle for that. Here was when everyone saw that raging outside day. Then you had the opposite side here for that nice reversal. In PS, you had a higher low, higher low, higher low, and now we've been hovering up here. And today we are opening up near this area or somewhere around there. But all in all, it's been a really nice tradable move for those that wanted exposure to Japan. You could have also chosen the DXY. You could have chosen Toyota. Let's take a quick look at Toyota. Look at the move that this thing has had all year. Either way, lots of things to like in the investment arena in Japan.
Well, in terms of our markets, our futures are up about 2 to 3 handles this morning after a controlled 3-day pullback. Yesterday, the S&P closed right around the 8-day. So, Scott, would you still deem this action healthy?
I do, even though the bears are claiming a victory that they've been trying to call a top all year, and we pulled in about 20 handles off the highs. But anyway, let's not talk about that. Let's talk about where the markets are and how we're going to handle it and try and make some money. So with that said, you look at the overall trend of the SPX, starting all the way back from the low, this little red dog reversal back in November that led to a really nice move for over the past year. As an intermediate trend trader, we look at different spots to switch some gears. This outside day was one of them. Then you had your reversal. This head and shoulders pattern was another one. Then we held. This breakout failure was another one. But all of these just about 4 to 5% corrections. So with that being said, on Monday we had this little false move above 1798. So if you wanted to sell some loose longs and maybe even look for a tactical short, this is so far all we've had. Okay, about 20 handles to the downside. Yesterday's low was 1777, above this prior 1775 high, above the 21-day, and all we're at is the 8-day. So at this point, I don't think you need to be all in long, all in short. I'm trying to be tactical and add just some cash flow every single day because opportunities keep showing their face.
And meanwhile, a lot of the trends that we've discussed all year remain intact. We've seen the TBTs go to the upside, TLTs to the downside, and gold still in a downtrend.
Right, and that's why you need to figure out what you're going to do and how you're going to approach it. If you put TBTs in the drawer, you never sweat it. Okay, if you try to maneuver the range of the TBTs and for cash flow with the tier system, you look at the chart here, you've had lots of that too. This is where the move started in May. This is when it broke above that key 70 area we talked about. Then it trended higher, and then if you were super active, this was your spot to perhaps sell some. Or you could have done it up here on this high level flag, or when it broke this area. But if you did, you had to get back. And this is when it started turning the corner, at the prior breakout. And then now it seems like this trend is starting to get reinvigorated, if that's a word. And with that said, I do think at some point, which we've talked about many times, and could be before the end of this year, could be the first quarter of 2014 or so, I think that gets taken out. And then on the flip side, if you'd rather be short something, with the time decay with these ETFs, it makes sometimes more sense. This is one area you could have gotten short, another one. Then you had a counter trend rally, and now look how we're on the dead lows. And I think about a week or two ago, we talked about how I think next year these things could be sub 100. So either you sit in them short or you trade them to the short side and figure it out. But either which way, whatever time frame you trade, lots of trends that started in 2013 in a certain direction stayed that way. And I think the last one you mentioned was gold.
Mm-hmm. Gold in a downtrend.
Gold in a downtrend. Not new news. Okay, might be new news to the bugs who have opinions, but gold has given you about 3 or 4 inflection points to add to shorts, and we even had that one tradable bounce in June. You look at gold here. Gold, the first time that you had a really decision to make, which actually started this move, was right around 160. And then when this macro, look at this macro support, it went back over a year. That broke right there. Then you had another trade, and then finally the blood in the street lows came in right here, which gave you a tradable bounce. And now look where we are. We had a key active price point to look at yesterday, which came right underneath here, and that stood right around 121.70, closed well below it. It's trying to bounce a little bit this morning, but I think look at all these moving averages curling down. It's only a matter of time, in my humble opinion, that we retest this 114.69 area.
So let's check in on some stocks that have been on our radar all week. We've been talking about Triple D all week, being as it flashed a warning signal on Monday, had a sharp sell-off on Tuesday, and then downside follow-through yesterday. So what are we doing here with Triple D?
Well, if you saw the warning sign on Monday and you sold, or you looked for a potential short the following day, now after 3 down days, you look to see if you could get some kind of red dog reversal, or you just sit on the sideline. You look here at Triple D. We've talked about the stock many times in an unbelievable sector, and this was when it was really excited in the base. Here's when it broke above. This is when it gave you another trade, and then it accelerated, and then finally Monday flashed that big time doji. So when you get a doji, you write down the high, you write down the low, and if it goes below that low, you either get out of your longs or you get short. Look what happened. Boom. Boom. Okay, so now this is where we are. So from as high as 84 down to below 70, maybe there's an opportunity to get long, but look where it just came from. So with that being said, I'm not going to have opinions. I'm going to look at this 68.30. If it were to trade below, come back above, maybe we get a tactical long. But if not, we just sit on the sideline. And you could do the same type of thing for a lot of stocks within that group, which we'll get to a little bit later.
All right, well, how about also Facebook? We talked about on Monday how it had been hanging by a thread. It did have a weak bounce the past 2 sessions. So do you think it's at kind of a tricky spot where we might have some more downside action?
Yes, I think it's tricky. It was upgraded today, so it'll be interesting to see if it can hold the gap. But overall, on a macro basis, there's been a lot of maneuvering to be done here. You look at the chart. You look at this first cup and handle pattern that ignited 2 quarters ago, then gave us a pent-up tradable move, and now it seems like a little tired. But the question is, can you get downside follow-through? And it's been a little hard. Okay, first of all, here's where you had your first real gap fill. It's been trending lower. Then it looked good, and then remember that bubble report came out on Barron's. It's been trying to bounce. It hasn't been able to. So today will be interesting. If it could hold the upgrade and hold the gap, maybe it gets a little bit out of the danger zone. I guess we could draw a new trend here where, in order for the pressure to get relieved, I would really think it has to get back above here. But the longer it stays below here, the higher the probability that the shorts will come after it for it to break this support. So I'm neither short or long Facebook here, but I'll see how it handles today and maybe see if it can either hold up, or if it starts to fade and goes negative, I think the short's going to be all over it. And then below 45.70, you could see more downside to this moving average.
And Boeing also flashed a selling signal on Monday and had a sharp 2-day, sharp 2-day pullback, but yesterday especially dropping another 3.3%. Where would you say support is now?
Well, even something like this, which was on our 2013 thesis, said exits and entries matter. And when I saw that candle on Monday, I'm like, you know what? If you've been in Boeing for this entire ride, congratulations. You rode it a lot further than a lot of us. But if you wanted to take some money off, why not? And if someone was finally looking for a cute short here, look at the chart. This was the exact chart that we showed, actually go right here, where you had this nice, tremendous move. And what happened? Gapped up on good news, they sold it down. That means it's a little bit overbought and could come under some pressure. So with that being said, selling there made sense, because then look what happened. Boom, traded below the prior low, and then look at yesterday. Really, a lot of pressure. So, I know if you've been riding it for a long time, you're locking some gains. Now at this point, I feel like you missed your chance to lock that in. Now we'll see if it could hold the 21-day. Stock has not broken the 21-day for more than a day, all the way back since before the summer. So with that being said, look for maybe an 80-20 trade around 132.29. You had your opportunity to get long, maybe even to get short. I think maybe you cover around here and then got to see what type of bounce happens. But I never like a breakout failure. Usually it leads to some sideways consolidation before some more downside. So we'll check that out.
And we've been talking all week about Apple and how challenged it's been with getting going. This one just can't find any momentum. Are you just staying on the sidelines with Apple for now?
I think yesterday was the first day that I did not trade it once in a while. Granted, some guys made money shorting below the prior low of whatever it was, I think 519. But, it is what it is. Right now, I feel like it needs space. It went from my A list to my C- list yesterday. So you look here, anyway, this is what we're seeing. This, is that lower pattern, okay, where it was consolidating after a huge move down from the 700s. Gave you a nice trade, a few earnings ago, and then it's been hovering. So the question is, could it continue? So that's what I've been trying to figure out, and I'm trying to not have opinions here. So last time it had this little false breakout right around 524. Then option expiration was off a little bit. That was frustrating, and then I got stopped out here. So yesterday it did break a little bit below this minor pivot, which was around 519. It's still above 512. now there are some reports out there that on December 18th, potentially China Mobile is going to unveil some type of relationship. And I think the reason why Apple is up this morning is because people are speculating that it'll finally be Apple. So that date's December 18th. Don't ever just get involved because of potential situations like this, but we'll see. Can Apple's gap hold today? If it does, maybe it takes time to build and we could revisit the trade. But if it opens up and goes negative and trades through yesterday's low, then you got 512.
There you go. All right, well, coming up, we're going to go in the trenches, measuring the temperature of different sectors. But for this quick commercial break, we'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches, measuring the different sectors. We've talked about this week how the banks have held in well, and the XLF is still hanging in there.
Yes, and even in the 3 days that we pulled back, some of the financials had made some headway. You look real quickly at the XLF that we pointed out on that jobs number, still looks intact. This was that engulfing bar, that's what got me back involved. It then broke above the prior resistance. Now it's holding above it, so I'd say the longer it holds above this 21, the better the chances that it continues. I still like Bank of America. I'm going to try and stay with it, but it could use a rest. This was when we got very excited about Bank of America, when it broke this little descending channel with authority, and then the continuation. So now it needs to hold above 15, and if we do see some strength come back to the banks, I might go after Citigroup. That's getting nice and tight. It would be nice if it could get and stay above 51.44 for some type of move back to highs.
And the home builders continue to get some selling pressure here. The XHB is still hovering around its 8-day. What's the key level you think that XHB needs to hold?
The home builders had a tremendous run for 2 years, and they're still consolidating. If you try and buy strength, it hasn't been easy, but they do look better. Even in the face of some higher rates, you look at this trend still intact. Now it's near the upper end. It's having some trouble here. It hasn't made new highs like a lot of other groups out there. But I don't think it's game over. I just still think it needs time. It just hasn't really been the place to be. So with that being said, if you have some select home builders you really like, I think you stay with them. As far as the group themselves, in order for this to stay intermediate constructive, I would say it needs to hold above this 30, 60-ish area in order to even have the attempt to continue to the upside. And
it's always good to see participation by the Russell, but this one's actually been lagging the market.
Yes, and this is, I think, what every bear in America is pointing to, how the Russell didn't make a new high when the S&P did, so they're looking at a double top.
Right.
So we'll look at it, we'll see. It hasn't really transpired too much throughout the course of this year using some of these divergences. They've led to some small corrections, but nothing too big. Guys are talking about this double top here. It is a little weaker, so we'll see what happens. Okay, this trend is still intact. I don't think you get really, truly worried unless we start breaking below this 107 to 108 area. So at this point, you could be neutral here, but I don't think you just have straight up short on the brain, and just see how that materializes.
And consumer staples had taken a turn doing well recently, but it actually broke below the 8-day yesterday.
This looks like the S&P, just 3 down days, controlled, lots of good names in there. I would just, have your commitment level. Let's just take a quick look.
Okay.
Why not? We're looking at things. So here is the prior breakout. It's still above. This was your high level that it just couldn't hold. So, I'd say as long as it stays above this 42 to 42.65, I wouldn't deem this anything but, a healthy pullback after an enormous move from the lower end of this range in the fall.
Great. Healthy pullback for consumer staples. Let's do some quick hits here and talk Zynga. Real relative strength yesterday, outperformed the market, 7% gain. Where is Zynga headed?
I said yesterday, I think by the first quarter of 2014, $6. And the reason being, it's one of my treasures for trash trade. If you look at the chart here, look at where this thing was. This is when the whole social media craze happened, but look at that outside day. I want you to look at that because at this time, everyone had an opinion in the world that this thing was going to 20 or 30. Meanwhile, it opened up and failed. Then it broke support here, broke support there, broke support there. So hopefully you didn't get trapped in this mess like a lot of people did with opinions because of the Facebook scenario. But anyway, now look at the size of this channel. Really nice long-term channel. About 15 months. Okay, now seems like it's poking its head above. You take a closer look. A lot of people were waiting for that magic 4 to happen. You know, it tried to do it after earnings pulled back, held higher. So I got back involved here, closed pretty well, and it's opening up a little bit. I think short term, you know, it at least tries to fill this gap. Okay, there's a gap that gets filled here, somewhere up to about 488. Let's see, where is that? I want to show everyone. Let's see, there it is. 488 is this gap getting filled. So that's, I think, where this first move can go. And then at some particular point, maybe with the January effect or whatnot, I think it can get north of 6. So if it does get into the 450s or so at some point today or close to it, maybe you trim a little bit, but ultimately I'm going to try and hold this thing now as long as it stays above 4 and you know, swing it all the way to a 5+ number.
Great. How about Tesla hanging by a thread at the 200-day? How bad would a break and close below this level be for Tesla?
It would just, you know, kind of signify that there's just more selling to come. I hate selling at the 200-day. You know, I like, again, with these strong pent-up names, I talk about selling when it breaks the 8-day or the 21-day in any name. So this way, when it gets to the 200-day, you can test it for a bounce and then see if that's a good longer-term area. Overall, though, the trend in Tesla changed before earnings, and then if you didn't take it into earnings, you've been out of the way just trying to maneuver. You look at the chart here, it looks as if, you know, you had the trend break right there. This is when the market made new highs and it didn't. This is where it was on earnings. So if you didn't take it into earnings like you probably shouldn't have, you know, you're out of the way. And now there was some positive news this morning, so it's up a little bit. I don't know if it's going to hold. In order to get, I think, some pressure off it, it's going to have to start breaking above this area in order to get the shorts out of the way. But with that being said, one level you have here is about 127.45, and then if it were to go from positive to negative today and break this 119 and change, you know, you got to look out below because the next step would be, like you just mentioned, one of the 200-day moving averages, which I'll put in for you. Let's see where that is. That's the 50. I don't know why the 200's not even on here, but I'll go get it, and that 200-day comes in right there at 108.
All right, an ugly day for VJet yesterday, lost 32%. Is this chart just broken now?
It's definitely not going to be making new highs anytime soon, in my humble opinion, but doesn't mean if you got out of it the right way, there's not an opportunity potentially today. You know, with that said, we've traded this many times. This was a great new issue, right? Closing the highs, gave you a second day, and then within almost not even 2 weeks, it started to wedge. I remember buying it on this day, and then it wound up breaking out. Okay, and from there it went a little bit parabolic. And when Triple D broke on Monday, hopefully that gave you a sign that the strongest stock in this group broke. You should take some profits. If you didn't do it that day, when it broke this prior low here of 60, that was your time. And if you did it then, you just saved yourself a heck of a lot of pain. Anyway, I think it's down a little bit this morning. I'm going to watch yesterday's lows of 38.76. Perhaps if it puts a low in it, just say 34, comes up to 35, maybe I'll try a little long verse at 34. Then I'll use 5-minute, you know, charts in order to see if it can work its way back above yesterday's low for a red dog reversal type trade, considering the size of this move lower. But again, these momentum names, you never know where they're going to go. So you don't just blindly buy because of the size of the move lower. You do a level versus a level, then you watch over the intraday relative strength to see if it could build.
Well, so as the trading session gets ready to begin today, what will you be focusing on?
I'm just going to see, you know, we have had 3 down days, so pressing the 4th has not been the most profitable trade in 2013, but it doesn't mean I'm just going to start buying everything. So with that being said, I am pretty light. I have I think I have 2 longs and 1 short, but very limited exposure. I'm going to see what happens with Apple. Does it hold the gap? See if high beta holds in. I would like to find some kind of tactical long within some of these 3D printing stocks if they show their face. And just want to see what happens with, you know, S&P 1775. Right now we're opening up above it. See if we could stay here when we start turning higher. That could have been it. But again, I'm not throwing some big money at these areas because I do think with a 25% gain in the S&P for the year, the majority of the money has probably been made. Now it's about being scrappy. It's about being tactical. It's about being, you know, flexible enough to take trades both ways. So this way you could add to your year and not give too much back. And that's a zone that I'm playing in. And I do leave on a plane today to go to Las Vegas to speak in Schwab's booth. If you're at the Trader Expo, come find me 3:15 tomorrow on Friday. No, what's tomorrow? Tomorrow is Friday. So 3:15 Friday in their booth, and then 10:15 Saturday. I would love to see you there.
All right, and that's your morning call for this Thursday. Happy trading. Have a great day.